Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, this weekend webinar is being filmed on Sunday evening for Monday's trading. That's August 3rd, 2009. And as you know, I like to go over as much news as I can on the weekends. I say this in all my weekend webinars. I read all the industry magazines, Wall Street Journal, Investors Business Daily, Barron's, you name it. I stack them up. I read them cover to cover, and then I go do my technical analysis. And what I mentioned to you in last week's weekend webinar was that lately the news, although yes, you can find negative articles if you want to look for them and you want to scan and be negative about the economy, but the gist of, or the flavor that comes out of these papers lately is much better than it's been for the last few months. The news, in other words, just makes me see this economy as going higher and the markets as going higher. And what I mean by that, if you recall last week, I read some pretty interesting articles to you, or at least headlines from some of the papers, and certainly the markets did move higher and the street seems to think that way. Well, this weekend I did a lot more studying, and I can say this, you know, one of the headlines, last quarter, the first quarter of this year, first quarter the economy falls 6.4%. That's GDP. This quarter, the economy fell 1%. That is a huge increase in economic activity. So go GDP, right? Imagine that. Traders, let's think about that for a minute. The first quarter, we fell 6.4% GDP, gross domestic product. This quarter, leading up to this month, we only fell 1%. Now, yes, that's a negative number. We fell, but we fell a whole lot less than the industry street expected, and we fell way less than the quarter before. So no matter how you want to look at this, that's not bad news. Then you have the ECRI, or it's the Economic Cycle Research Institute, which has a gauge of future economic growth, and they say that the index's annual growth soared to 8.8% to a fresh 5-year high, traders. Not only that, but they say this, they quote this, not only is the U.S. recession set to end this summer, but a recovery is apt to be stronger than many expected, says the Institute. So, they expect the recovery to be stronger. They see something different. Their gauge is at a 5-year high at 8.8%. Then we have earnings season. It's still going. But according to Investors Business Daily, with already 337 companies out of 500 that make up the S&P reporting results, 74% have top analysis views compared to only 17% below. So in other words, out of the 337 companies, 74% beat the analyst views on the street. Only 17% of what's reported so far fell below what's expected. That is more good news, traders. Then you have Case-Shiller. Case-Shiller says new home sales in June rose. New home sales in June rose. Could you imagine? It also says, Case-Shiller goes on to say, that home prices rose for the month of May. It's the first monthly gain we've seen in 3 years. Now let's talk about that for a moment. If you recall, the major factor, at least according to all the news that you could have read at the time, that knocked our markets down was the homes, right? Home sales went down, prices went down, mortgages started to go through the roof, people couldn't afford their payments, and the market broke down. We haven't seen any increase in a long time. Suddenly now, we've had an increase. So not only in June did prices rise, but the amount of home sales rose as well. So hey, congratulations to the whole sector, I guess you'd have to say, because not only is that real estate, but that involves insurance and banking. So if we can get real estate to continue to pick up, certainly more and more traders are going to start buying into this market. Then you go across the oceans in Japan, Mitsubishi UFG, that's Japan's largest bank. It reported a return to profit in the first quarter of this year. A return to profit, Japan's biggest bank. That is more proof that the government's package, their stimulus package, and what they've done to help their banks in Japan it's really beginning to work. It's eased the strains on Japanese banks and brokerage firms. So you have that going on. Then in the Wall Street Journal, there's more headlines. One of the headlines is, the U.S. economy pulls out of tailspin. The U.S. came out of its tailspin in the second quarter and may be poised to resume growing now, in the Wall Street Journal. Then, as we're talking about more U.S., the best 5-month run since 1938. Huge article in Barron's this weekend. 80% of the Dow stocks are above the 200-day moving average as compared to only 1% that was above so far during this recovery in March. So what they're saying there is, it's a pretty big article, but what they're saying is March, only 1% of all the stocks that can be above or below the 200-bar moving average were below, or I should say, all the stocks except for 1% were below, and now you have 80% of the stocks that make up the Dow above the 200-bar moving average. That means, traders, that this recovery is gaining legs. All right, a little bit more news. From April, June publicly traded stocks sold over 92 billion shares to investors. That's the highest level of investor interest in 20 years. Notes Thomas Lee of J.P. Morgan. In 20 years, we have not raised $92 billion in shares publicly traded. So, wow, imagine that. That fast, things are starting to turn around. Now, let's keep something in mind, traders. Keep in mind the conversation that we have had several times in recent videos. The astounding pace that we have seen major corporations either slash payrolls, slash inventory, slash capital spending has positioned these companies to profit hugely on even a small rally in their stock prices. This will help feed the market's buying frenzy as the recovery continues. And last but not least, nearly $5 trillion, with the T, baby, nearly $5 trillion is estimated to be sitting on the sidelines right now, awaiting entry into the stock markets, according to many industry analyst reports. $5 trillion on the sidelines. How many of those traders and funds and fund managers do you think are standing there right now going, you know, we haven't gotten in since March. This thing's moved up a lot. What if we miss the move? So I would think any pullbacks will be purchased by the street in our stock market. And according to the news we just discussed, that's very likely what's going to happen here. So in my opinion, pullbacks need to be purchased. And of course, that's on a larger scale. Now, if you take this to a shorter scale, like trading for tomorrow, this is Sunday night for trading Monday, the markets actually look to me like they want to come back a little bit. And you know what, traders? A little pullback here for 2 days, let's say, would be very healthy for the market and for us day traders. We've had a lot of up movement. A couple of days back would be fine. Markets should backfill as they move higher if they're good bull markets. So for tomorrow's trading, and of course, again, let me repeat, the larger picture, we are buying dips. Any big dips, we are getting involved. But not every day as day traders could we possibly just take the buying dip posture. So this evening for Sunday night into Monday, we are going to sell the S&P, look for a pullback, jump out, and then stand there and wait and see what's going to happen, because inevitably we want to be buying this pullback. But hey, if it's going to give us a short opportunity and head down, we'll sell it for a quick trade. Then we'll position ourselves long again if and when the pullback does come. Now, traders, clearly the NASDAQ has emerged as the leader, right now, at least the current leader, of all the indice markets. For many years, it was the Dow Jones Transportation Average, and the NASDAQ was right behind it. But lately, you will find the NASDAQ and the Mini Russell absolutely lead this S&P and stock market around. No doubt, no qualms, no doubt about this. Look at your charts, watch the movement every day. It's almost as if we're glued to the S&P and the Mini Russell right now as far as the S&P is concerned. With that in mind, the indicators do not look good right now in NASDAQ for day traders. For a 1 to 2 day pullback, they look good, but they don't look good for a rally. So it looks like a little breather is coming our way in both the NASDAQ and the Mini Russell, which means the S&P will likely drop with it. So quick trade for tomorrow is certainly going to be, we're going to sell a rally, let it pull back, and then try to position ourselves. Now I have some charts I'd like to show you. In a couple of moments, I'll go to the charts and I'll show you why we're following the NASDAQ, why it looks like it may want to go down, and if it is leading the S&P, we'd have no choice but to wait for a couple of day pullback if we wanted to buy it or sell into this and see if it drops, and we'll capitalize quickly and get out and get long. That will be determined by market movement, but our trade setup for tomorrow is to sell and let the S&P pull back. Also, traders, soy meal, soybeans. I mentioned them to you. I debuted them to you last week, probably on Tuesday, Wednesday, and again on Thursday. We might have even talked about it on Friday. Each day that we talked about the beans and soy meal being the leader, the beans did move higher and the soy meal led the way. Now they're really starting to take off. I mean, let's go. They have rocketed since last week. And I have a couple of charts on those two I'd like to show you. So with no further ado, let's go to the charts. Okay, traders, the first chart you are looking at here is the Mini Russell Daily Bar chart. The Mini Russell Daily Bar. I don't know how many of you follow this, but the Mini Russell and the NASDAQ are very sistered together, so to speak. They are partnered up and they move almost hand in hand. And I have noticed that along with the NASDAQ, the Mini Russell certainly appears to be an industry leader here. So with that in mind, I do analysis every evening, of course, on the Russell as well as many other indices. And I noticed that we dropped out of this really nice channel. We had a beautiful channel we were in. We settled here and we dropped out of it. First thing that happened on Sunday evening tonight was that we dropped out of the channel, and it appears that it probably wants to go lower here. So I looked at that and said, well, the indicators have all been calling for a little bit of down movement for the last 3 or 4 days. On Friday, Saturday, and Sunday, looking at the analysis, they really called for the downside. Then I look at the chart and realize maybe there's a reason we just fell out of that channel. So maybe the Mini Russell, now that it's dropped below its parallel support line, maybe it's ready for a short for a couple of days. And traders, I'll tell you what, I wouldn't mind at all a 2-day pullback, something that we could all sink our teeth into, at least the traders who are looking to buy dips that believe we are in a recovery here. So a 2-day pullback would be nice to see. We have been bullish, and I don't know that we'll pull back, but being that we are below this parallel channel right now with all the bearish indicators, that would mean formation and indicators are now pointing lower, and at that point, as an analyst, you have to expect lower. So no opinion involved here, pure analysis, indicators pointing lower, broken down through the channel, maybe a little pullback is in store for the Mini Russell. Let me show you a NASDAQ chart now. Okay, traders, you are now looking at the NASDAQ September daily bar chart, and once again, a really long parallel channel that we've been in, and you know I like buying the dips all through this channel. And once it hits the bottom, you expect it to go back to the top, and then the bottom, and back to the top, and then the bottom, a little break here, and then back to the top you'd expect. Well, we almost got to the top. It got here, and the top would be there. It got very, very close on Wednesday, or on Thursday, I should say. It didn't quite hit it. Then we came a little bit lower on Friday, and this evening, once again, we are below a support line. Sunday evening, the market is trading down here below the support line, and I'll tell you what, that has really bearish indicators with it as well. So maybe as a little bit of time passes, this will be recorded as the market went up, down, top of the line, bottom of the line, top of the line, and maybe it'll come down to the bottom of the line. I don't know that it will do that. I don't want to see it do that, but maybe that's what this means. Well, indicators are bearish. NASDAQ happens to be the leader, fell down underneath its support line, possibly did already hit the top of the channel. Maybe a couple of days pullback is what we're going to see here in NASDAQ as well. Who knows? According to indicators, that would be the case. And now according to the formation, there's a reason to think it may go lower. So that is the leader, NASDAQ, along with the Mini Russell, which leads right alongside of it. They certainly do look bearish. And I'll tell you what, I'm going to show you a chart of the S&P, which does not look as bearish at the moment, at least when you look at the formations. The indicators are bearish in the S&P, but the formation is not as bearish as that looks. However, the NASDAQ's the leader, not the S&P, so we follow the leader, and if NASDAQ wants to come off, S&P will be right behind it. Let's go look at that S&P chart. Okay, traders, this is the S&P September daily bar chart, And as you can clearly see, of course, above that old head and shoulders everybody spoke about for a while, had a nice run up. Then it created this bull flag, which we showed you last week. It expected this rally to happen, and it did go up at least for 2 days so far, or 1 day, and today it's above. However, I think that it may come back down and at least test this, if not go right down to the bottom of it and test it, because the NASDAQ's starting to look bearish for a couple of day pullback. Now, granted, this view on its own, if I only had that one chart to look at, I wouldn't sell that, to be honest. I would not sell that. Not all the years I've been doing analysis, I would look at that and say, you've gotten above a bull flag, it should keep going. But this is not the leader, the S&P. It's the NASDAQ that's the leader. And if NASDAQ wants to point lower, S&P will find some way to test either here or here, either the top or bottom of the bull flag it broke out of. So I am going to go at least on a very, very short term, being tonight into tomorrow, Sunday night into Monday. I'm going to go with the short side of S&P. And again, if we get somewhere in here, then I'm going to poise myself for long once again. I'm going to step back and look to buy the dip. But for now, I think we expect this to turn around a little bit. Let's see what we get. Now you have seen the 3 charts. I showed you, of course, the 2 leaders, which was the Russell and the NASDAQ. Then I showed you the S&P. Now I'd like to show you the indicators behind the NASDAQ and the Russell, because I think you'll see for yourself that this is not as bullish as it seems on that chart when you look at the indicators and the formations of the leaders. Okay, traders, what you're looking at is the Commodity Channel Index, or the CCI. It looks exactly the same in the mini Russell as it does in the NASDAQ. This is what they look like. The CCI, clearly it's no longer pointing up. It has bent over. The averages have crossed one another, and they are both pointing lower right now. So you'd have to say that that's a lower indication. Then again, don't forget the channel that we fell out of. If we are below the channel and you have bearish indicators, a 2-day pullback wouldn't be out of the question here. So here's the reasoning behind the analysis. First, the formation looks bearish. Then you go pull indicators, and they're agreeing with it. That's interesting. That's your CCI. Let's look at another indicator. Okay, traders, next up is RSI, or Relative Strength Index, for the NASDAQ and or Mini Russell. Again, they both look the same. RSI is clearly pointing lower now. It's gotten way above where it usually gets before it gets overbought. Went much higher than that, but now it's hooked. That hook, lots of times, will give you some sort of a pullback. And if the indicators pull back, usually the market pulls back with it. So here you are looking at a second indicator, CCI and now RSI, both pointing lower. Let's look at a couple more indicators. Okay, traders, you are looking at slow stochastics wrapped around the NASDAQ and or EMINI Russell. Stochastics have reached the point they normally do reach before they are overbought. And they have hooked down like the other 2 indicators you've seen before this one. And that is not a bullish signal. However, we all know this. In a bullish market, this could easily just ricochet back and forth and stay overbought for weeks on end as the market explodes. But again, the indicators are all pointing lower. They're not pointing up right now. They are pointing down. So we expect another, once again, 2-day pullback in the indices. Could even be more than 2 days, but that would make sense. A quick 2-day pullback, Monday, Tuesday dip, Wednesday, Thursday, Friday recovery. In a bull market, that is likely what you'd see. We're still deciding whether this is a bull or bear market, but it sure does look better to me than the bears, I'll tell you that much. So another indicator pointing towards the possibility of a small pullback here in our indices. Let's look at one more. Okay, traders, now you are looking at the DMI, or Directional Movement Indicator, and this clearly is pointing lower. You have the positive now pointing down. The negative has turned and is starting to point up. When the green or positive points down and the red or negative points up, almost always the market itself starts to trend a little bit lower. So many indicators are clearly pointing towards a bit of a pullback might be necessary. Overall, traders, keep this in mind. I will say it again. We are buyers of any big dips overall. Our longer term view is if it does dip, great, we'll buy into it. But as day traders, we can certainly try to sell that dip until it gets down there, which is what we're going to try for on Sunday into Monday. Okay, traders, the next two charts will be the soy meal and the soybeans. I thought I'd give you a visual look at them as we have been looking at them and discussing them in the last few videos. So let's take a look. Okay, traders, the first chart you're looking at in the grain complex is the soy meal, or the ZMU9 September soy meal daily bar chart. And we have broken above resistance. We are all the way up here on Sunday evening. It gapped open and took off. Traders, we mentioned this to you in the early part of last week. We said it looks to me like soy meal is beginning to lead the way. It got above our Omni average. And if it goes, it will take soybeans with it. And look at the explosion that you've seen. 4 big days straight up. That's soy meal, the leader of beans. Let's go look at the bean chart now. Okay, traders, you are now looking at the soybeans November daily bar chart. And here's where it was on Friday. We did have a nice fat rally. As you can see, only one big rally day. So the meal certainly did lead the way. Meals had 3 or 4 straight up days. Beans have had 1 or 2. So once beans broke out above the 200 bar moving average and got above our resistance line, they really started to go. Now they are 2 above the Omni average. And look what happened. From Friday's settlement to Monday or Sunday night's opening, it opened here, left a gap, and exploded. This could very well turn out to be a breakaway gap. If it is a breakaway gap, we're going up, up, up. I am a person who likes to believe, or an analyst who likes to believe, most gaps get filled. But when they're breakaway gaps, that's the whole purpose, or the name of a breakaway gap. The market breaks away and just keeps on going. So we'll know very shortly if that's a breakaway gap or not. Either way, very bullish soybeans and soy meal. Pull your charts, traders, do your own homework. See if this agrees with your work. If not, make sure you come on down to the Omni Trading Academy so we can help you see it the way we do. Because in most cases, we clearly just read the charts for what they are. Absolutely no opinion involved whatsoever. And if you want to be a good analyst, you remove your opinion and just do your homework. So, traders, you see those charts? I mean, wow. I'll tell you what, the soybeans and the soy meal, what an explosion right out of the trend channel. And speaking of which, I showed you what happens when you get above a trend channel. If we are below the trend channel in the EMINI Russell, you could get the same reaction down, but not as badly as we've just seen the soybeans go up, because I think it would just be a slight pullback. In fact, if you look at this, if you have a market going up, 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 you know what? After it's gone up for a while, a 2-day pullback like this would be wonderful, because then we can buy it and expect the upside. Again, I don't know that we're going to get that pullback, because we are buyers of dips, and this is becoming a bullish market. You just heard the news I read to you, but all good bullish markets pull back first, backfill, and then go higher. So we could use that. It would be healthy, and it would not mean you need to run for the exits. It would mean you need to get ready to buy something when it comes down. So let's see what we're going to get. We are also looking to buy beans if they set up, and we are looking to buy euro currency on a big dip, if the euro currency sets up. And of course, we have NASDAQ and S&P trades. And if you'd like to know about those trades, simply come on down to our site. It's www.livewithoscar.com. Grab a free membership. Jump into the free chat rooms and go look at our Omni recommendations, because you can see what we're looking to do. And in the chat rooms, many of us are in there every day. Hundreds of us are in there every day, helping one another get through these markets. And I am at the helm, helping all of you learn how to be better traders. So come on down. Traders, that goes with don't trade alone. I kid you not, you can't imagine the stacks of letters I've received from many traders who say, Oscar, you always say in your videos, don't trade alone. Well, I finally took your advice and went into the chat rooms, and it's so much easier to try to get this done when I'm speaking to other people. The news, you find out quicker. People disseminate it as quickly as possible. Many reasons why, but they thank me so many times for stopping them from trading alone. So come on down to the site. Don't trade alone. Traders, another thing I will always tell you in every single video is no matter what recommendation is posted, no matter who you believe in, do your homework first. Make sure you agree with that trade, because if you take the recommendation, it is your fault. Win or lose, you made the choice. So don't make any choices you haven't researched. And of course, always, always put a stop in the market. A stop is your best friend that is always on my board. I repeat this in every video. A stop is your best friend. Do not trade these markets, especially futures markets, without a stop. If you're long, have a sell stop. If you're short, have a buy stop. But do not trade without stops. All right, traders, I hope this video is helping keep you in tune with the broader base market. The news certainly helps to keep me in tune with the big picture. Then the analysis helps me stay in tune with the day trade, the small picture. And the news and the charts, weeklies and monthlies, that's like the forest. The dailies are like the trees. We jump in and out of the trees using the dailies. But do your homework. Use the dailies, the weeklies, and the monthlies. It'll really help you figure out what's going on out there. All right, traders, give us a call anytime day or night, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do to help yourself with that is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.